Morning, Steve here in Chicago. Happy Friday, everybody. It's not quite as cold here in Chicago as it has been, but over the weekend it's supposed to turn colder again. So we still have some very cold wind chill indexes around the Midwest. We did see one Chicago weather forecaster talk about March being a little bit colder than normal, so we may not be able to get out of this for a while. One of the things that the markets traded yesterday was the USDA Outlook Conference. We came out with 83.5 million soybean acres. That's below the average trade guess. We saw a pretty good rally in the beans. We also heard that in Brazil the truckers may extend the strike down there. That caught a little bit of short covering in the beans. And then finally, as we go into options expiration today, there was some concern of short covering around the 350 March meal strike price and the 1020 March soybean strike price. Overnight prices are just a little bit lower in corn and beans, and just a penny higher in the wheat. The outlook numbers came out with their S&Ds. USDA expects the 15-16 soybean carryout to be 430 million bushels. That's probably a little bit higher than some people thought they would say. Lower acres were offset by a little bit higher yield, and their demand increase is not as much as maybe what some of the private people are looking at. The corn carryout's around 1650. That is down from this year's number, and again they're plugging in a trend yield and a little bit less acres than maybe what some of the farmers might be thinking about planting, and they increased the wheat carryout next year due to trend yields. Some of the other headlines from the USDA. Number one is they expect that all of this big data that people are accumulating for U.S. farmers could help increase productivity down the road. The USDA is also estimating that the record low percentage of U.S. consumers spending on their disposable income on food. It's at 10%. And they also said that we'll see a record production of meat in 2015, which could offer some resistance to meat prices. The USDA did expect net farm income to drop, but they also felt that the last 4 years of record net farm income could help farmers going into the 15 crop year. Yesterday I was in Iowa at a farmer meeting. I asked the farmers there in the crowd how many of them were going to lower their acres in 2015, and none of them raised their hand. So it sounds like they're going to plant the same amount of acres. Just what kind of mix are we going to see, corn versus beans? There was also a weather expert there, and he's saying that have a normal spring, and could be a little bit of dryness in the summer, especially in the southern part of the United States. And he was projecting the highest probability of a corn yield in 2015 at 161. So that's probably a little positive if we have a yield at 161. So we'll have to watch that pretty closely. He's also watching some of the oscillators and El Niños. He's got a couple of years, 1980 and 1936, which were drought years, in which could fall into place. He's putting a low probability there, but he's watching some of the indicators pretty closely in case some of the dryness he sees in the Southwest leaking into the Midwest this summer. So market in general, still bearish beans, thinking that once we make this transition to South America, once the farmer down there sells beans, once the demand shifts from the U.S. to South America, prices will go lower, and thinking that corn and wheat's in mostly a trading range. Wheat might be a little high priced because there's plenty of wheat in the world at lower prices than U.S. Again, 2015 will be all about weather, and we'll just kind of fine-tune that as we go down the road. So I hope everyone has a good weekend. As always, these are my thoughts, not those of ADM or ADM Investor Services. And have a safe and profitable trading day.